Welcome back to FinMeUp. Today we'll be looking at our 2022 US listed stock picks. This year we have a strong focus on companies making profits and companies that are still showing a lot of growth in industries that we like. In the past, our US listed stock picks have performed exceptionally well with the likes of Tesla, Nvidia, Sea Limited, Square and more. But this year there's a lot of uncertainty with inflation, with interest rates, and overall valuations. We've already seen many growth stocks getting hammered the past few weeks. Once again, we are going to track our performance of our 2022 US stock picks to the market, the NASDAQ, throughout the year. So the index code is IXIC, the one that we'll be tracking on the NASDAQ, and today that is worth $14,935.90. So if you want to track our performance, you can look at that as well. This year, we have 9 US stock picks. You will see as we go through of them, there is a strong focus on semiconductors, on advertising, growth, cash, and profitability. There are other companies, specifically high growth companies, that have seen a big pullback in the past few weeks, as just mentioned. And there are also some value plays that should not be ignored. But many of these companies that did not make our stock picks for this year doesn't mean that we don't like them. As the year goes through and as we decide to buy some companies, as we like them more, as our conviction grows, we'll let you know on the FinMeUp community channels. But they haven't made it in these picks, and they include many high growth companies. If you want to receive those stock picks for free, make sure you are on the FinMeUp WhatsApp group or Telegram channel for daily content, or download the app when that comes live later this year. The link is in the description. Let us know in the comments what your favorite companies are for the US, and let's see what the rest of the community say. Just a reminder that this is not financial advice. These are our picks for the year with our reasoning and research and opinion. Always do your own due diligence when it comes to investing. So let's get into it. Our first pick is AMD. We have covered AMD previously, and that's already been up about 30%. So well done if you bought. AMD is short for Advanced Micro Devices. The share price is now $132 with a market cap around $160 billion. AMD is still firing on all cylinders. Semiconductors are essential for the fourth industrial revolution, and we have covered AMD previously at $90, where we already stated that we are bullish on the company. Now it's $132. If we look at their Q3 results, the revenue increased once again 54% year over year, and the gross margin growing more than 4% points over. It grew to 48%. Sorry for that. By the way, we love their CEO and all her ambitions for AMD. The cash, they're sitting at a strong cash position at the cash and cash equivalents sitting at $3.6 billion. And the company repurchased more than 7 million shares of their common stock, which was $750 million during the quarter, just the quarter. So they are showing confidence in their own shares, buying back shares. I always love to see that from a company. The net income was $923 million compared to $390 million a year ago. So there is massive growth for AMD. If we look at some of their announcements and highlights, AMD is working with Microsoft, Cloudflare, Google Cloud, and that's just to name a few. If we look at their outlook for the fourth quarter, which they still need to report, AMD expects revenue of approximately $4.5 billion, plus or minus 100 million. An increase of approximately 39% year on year, and even 4% quarter over quarter. So all long story short, they are showing growth in all aspects of their business. We love this business. And semiconductors is essential for the fourth industrial revolution. Semiconductors are in computers, in phones, in clean energy, in computers, in everything, in iPods, you name it, in medical equipment. So there's a massive demand for semiconductors, and that demand will continue to be strong. So our second pick is ASML. Also in the semiconductor space, but a bit different. So the share price is $756, market cap of $300 billion, and a PE ratio of 50. ASML basically makes the machines that make semiconductors. In more complex words, they are an innovation leader in the semiconductor industry. They provide chip makers with everything they need, whether it's hardware, software, or services, to mass produce patterns on silicon through lithography. Their customers include companies like Intel. And as we've been tracking Intel the past year, we know that they are investing heavily to gain back the growth that they lost from their competitors. So could ASML potentially benefit from that? Well, we believe so. We like this business. And we love a business that has so high demand that they struggle to keep up with it. Today, ASML is, like we said, worth $300 billion. So if we look at their revenues, they post in euros because they are actually a Netherlands company. But if you go through their financials, we won't bore you in this video. We'll cover all these companies in more detail as the year goes by and as we track them. So this is just more introduction video. And if you go through the financials, you see that there is a lot of growth in this company and they still see a lot of demand. Recently, we also had David Shapiro on this channel where he discussed some of his favorite growth stocks, and one of them were ASML. We'll put that link in the description too. If we look at the outlook from their CEO for ASML, they state that the demand continues to be high, the ongoing digital transformation and current chip shortage feel the need to increase their capacity to meet the current and expected future demand. So there is massive demand. We love this company, the demand is high, and they are producing an essential product to sustainable digital transformation. Our third stock pick is one I'm personally very, very bullish on, and I'm just keen to buy more and more and more of these shares. It's a very high conviction stock for me, and you'll see now why. So Skyworks Solutions is the company's name. Share price of $154, market cap of only $25.5 billion, so it's still small compared to some of the others. The dividend yield is 1.4, so they're actually paying dividends, a PE ratio of 17.6. Not an expensive company. So what I like personally about this company, and this was my pick for the team, was that first of all they are in a great industry, also with the chips, and their valuation is extremely attractive and they're showing a lot of growth. So it's also a 5G exposure. So with the technology experts predicting that there will be 75 billion connected devices operating worldwide by 2025, Skyworks is uniquely positioned to capitalize on the emerging 5G and Internet of Things IoT opportunities. Their customers include big companies like Amazon, like Cisco, Google, Honeywell, Microsoft, Sonos, Samsung, Vivo, and more. So they've got a big customer base. Their financials are looking strong. If we look at their fourth quarter results, the deliveries record a Q4 revenue of $1.3 billion, up 17% sequentially and 37% year on year, showing awesome growth. For the full year, they delivered $5.1 billion, which was up 52% year on year. Remember, this is a company in the industry that is growing exceptionally fast, sitting on a PE of 17, so they're actually profitable with a very reasonable valuation with a market cap of just around $25 billion. Yet, they are showing revenue growth year on year of 52%, and I mean, their revenue for just the full year was $5.1 billion. So the price to sales, if you want to compare it to that, is around 5. I love this company. I love what they're doing. I love the growth. And I love the industry. And if we look at their outlook from their chief financial officer of Skyworks, he recently said that based on the continued content gains, product ramps, and design wins across both mobile and broad markets, we expect further double-digit growth. Double-digit growth again. So, you know, they are showing a lot of growth. They're expecting growth. They're on a great industry, a great valuation. Skyworks Solution is one of my high conviction stocks. Looking at our fourth one is Lennar Corporation, and this is a kind of stock pick we haven't really made before. They are actually in the home building industry. So their share price is $102.95 with a market cap of 31 billion, a PE ratio of 7, which is very low if you look at the broad US market. So Lennar is engaged in home building and financial services in the United States. Their business consists of home building being the biggest aspect of their business, Also Lennar Financial Services, Rialto, and Lennar Multifamily. Remember, people need a place to stay, and Lennar is a home builder. There is currently a massive demand for houses in the US, and the housing market is extremely strong at the moment. Some people believe that the fear of interest rates hikes is also overdone, which we will have to see as the year goes on, what the Fed does with the interest rates and how that impacts the business. But Lennar has a strong outlook. It's also a diversified stock, a diversification stock for us, and not the classic tech stock that gets hyped. The easy money has been made the past few years in the stock market and in crypto and in tech businesses. So maybe 2022 will be the year people spend some of those profits on building new homes. Well, we already see a big demand for Lennar's services. So it's also something different. Their biggest challenge is actually managing the supply and the labor, but the demand is there. So demand is not the problem. The stock is quite cheap in our opinion. Once again, this is not financial advice. This is only our opinions. But the Q4 results also show that they are growing for a company sitting on PE of 7. The revenues are also increasing 24% from Q4 2020 to Q4 2021. And the revenues for the quarter was $8.4 billion. The deliveries also increased 11%. Also, another confidence booster is the repurchase 10 million shares of their own common stock, which was just below $1 billion worth of shares. Their home building cash and cash equivalents are $2.7 billion, so they're also sitting on nice amounts of cash. Looking at a comment from the management, the housing industry continues to exhibit strong demand, outweighing supply, and we are confident that we will continue to generate solid growth and enhance our current market position. Accordingly, as we look forward to 2022, we expect to deliver approximately 67,000 homes with a 27 to 27.5% gross margin for the year, with more or less 12,500 homes at a gross margin of approximately 26.75% in the first quarter. Overall, we are operating from a position of strength with an excellent balance sheet, enabling us to continue to execute on our core strategies. So that is a confidence booster. We like it as a diversification play into the home building industry in the US, and it's at a very reasonable valuation in our opinion. So that is our fourth pick. Getting on to our final pick, which is our fintech pick for the US, and that is PayPal. Other companies that our team also discussed for this pick was companies like Square, even C Limited, like some of the banks, but we decided to go with PayPal. So PayPal's share price is $187.60, $187.60, market cap of around $220 billion. So why we chose PayPal was, first of all, if you look at the stock price, it already came down significantly the past few weeks, and there's a lot of good news happening at PayPal, and they are showing growth. They are already a massive company. I mean, we don't have to say too much about PayPal. You probably know them. They recently announced a partnership with Amazon, moving away from eBay, which we like. They also now have crypto trading on Venmo, and Venmo is almost like the Cash App, the super financial app, and that will also probably boost the revenues. Square is also closely on our radar, but for this year, we chose PayPal. The consumer confidence is weakened with the absence of stimulus payments, according to one of their directors, and with the economy reopening, more people may be likely to do their holiday shopping in store, which could maybe impact PayPal a little bit negative. But overall, we like PayPal for our financial stock, and we believe at this valuation it's not a bad company to consider investing in. So we like PayPal as our fintech choice. Our number 6th pick is Lam Research. This is actually a new one we haven't covered before. As the year goes on, we'll get one of my friends who will probably tell us more about Lam Research. He's been following them for quite a while, so stay tuned for that. The share price is around $669, market cap of $94 billion, P/E ratio of 22.6. It's also a semiconductor pick for us. If we look at their Q3 revenues, it was $4.15 billion. That is only for the quarter. And if we look at their 2020 revenues for the Q3, it was $3.18 billion. So they are showing growth. They're also very diversified if you look at their geographic locations. majority being in China at 37%, then Korea, then Taiwan, then Japan, Southeast Asia, then United States, then Europe. So, there's some different exposure there. The company's EPS is expected to grow 26% this year, crushing the industry's average, which calls for the EPS growth of 22.4%. They've got a strong cash position, and semiconductors once again are the backbone of the current day technology-driven economy. And, the demand for the product is there. The accelerated deployment of 5G technology, which is the next generation wireless revolution, is likely to propel the further growth for them. Apart from this, blockchain, IoT, autonomous vehicles, or augmented reality, and wearables are other growth prospects for semiconductors and a company like Lam Research. Our seventh pick is Meta. So previously known as Facebook. You may use some of their services, you most likely do, which is WhatsApp, Instagram, Facebook, and more. So the share price is $331.79, market cap of 323 billion, PE ratio of 23.7. Now, if you look at the other big tech companies growing the revenues at the same rate as Facebook, Facebook does not look cheap. Facebook looks cheap. There is a lot of controversy when it comes to Facebook, but still, who doesn't use their platforms? I mean, to be quite honest, sometimes I enjoy targeted ads as I find new interesting platforms and products where many people hate it. So there's a lot of controversy with Facebook, but advertising will continue to be big. Even as a business like FinMeUp, we either advertise on Facebook or on Google. They will both be used. The monthly active users for Facebook were 291 billion as of 30 September 2021, which was still a 6% increase year over year. They also announced the share repurchases, where they repurchased $14 billion of their Class A common stock in the third quarter. And that also shows, that they are believing in their own stock at the current prices. And they also announced a $50 billion increase in their share repurchase authorization, with the cash and cash equivalents sitting at $58 billion. Q3 revenues, the revenues increased 35% year on year. But what excites us is that their other revenue stream, what they classify as other, grew 195% year on year. Could this be Oculus? Well, who knows? The revenue for Q3 was $29 billion. The net income, $9.2 billion. So overall, we like Facebook. We like their moves that they are doing into the Metaverse as well. At the valuation, we just like Facebook, even though there's a lot of controversy. But it's also a bet on the Metaverse, with Oculus being number one. In December, Oculus was the number one on the chart on the App Store. So it just shows you that there's massive demand for even Facebook's not well-known products like Oculus. Our eighth pick is also similar to Meta, which is Alphabet. Alphabet share price is $2,740, market cap of 1.82 trillion, so it's huge. PE ratio of 26.39. And once again, as we'll continue to dominate, YouTube will continue to grow. We will still use the internet, and Q3 was another record-breaking quarter for them. They've also got various businesses that we don't necessarily know of, we know of, we just don't really cover them that much in the news. Revenues increased 41% year on year, and the profits increased nearly 69% in the previous quarter. It's a business, we can't live without. From the big tech names like Apple, Amazon, Meta, Alphabet, Netflix, all of that, Meta and Alphabet are our favorites at these levels. Then our last pick is UiPath. UiPath share price is $39. It's also something we haven't really covered, market cap of 20 billion. So what UiPath does is, it is a leading enterprise automation software vendor that helps organizations efficiently automate business processes. And, basically they offer an end-to-end platform for automation, combining the leading robotic process automation solution with a full suite of capabilities that enable every organization to digitally transform its business, according to their website. So basically, to summarize what they do in 2 words, it is automation robots. So they expect the market that they are targeting to reach $60 billion plus, not too far from now. even on Fiverr, you will find people that assist with the implementation of software. Even Fiverr is an interesting company. But we will do a video on high growth stocks that we are tracking soon. So make sure you stay tuned and subscribe for that. They have a recurring revenue business model, and as the annual revenue, the ARR grows when the customers deploy more robots, adopt more platform products, and expand the use cases, the revenues will grow. There's a strong customer growth momentum for them, and for those following Cathy Wood, she also loves this company. If you look at the ARC Innovation Funds, their annual recurring revenue is now around $818 million, with new ARR coming at $92 million. They are operating at high gross margins. They've got a strong cash position and about no debt, so they have the cash to grow the business. And if you look at the recent news and highlights, they were named a robotic process automation leader and star performer in the technology vendor landscape for the 5th consecutive year. They announced a go-to-market partnership with PwC, announced new partnerships with Alteryx, CrowdStrike, Snowflake, QLick, and more. And for the fiscal 4th quarter of 2022, UiPath expects an annual recurring revenue in the range of $901 million to $903 million. So it's looking good. It's also a different company for our stock picks this year, a high growth company, a recurring revenue model, announcing new partnerships. Also, they are an automation for companies, making life easier. So we like what they do. We like what they operate in. We love their CEO and his humbleness and just how he runs the business. So those are our picks, the 9 picks. I know this was a long video. Thanks for staying till the end. If you missed anything, you can, maybe watch it again. Let us know in the comments which companies you pick for 2022, the US companies. Like I mentioned previously, we have a list of high growth companies and stocks that we are really watching closely, very, very closely. They just didn't make it into our picks, but we will cover them. We'll make a video where we cover those stock picks. Check the link in the descriptions. Join the community. If you found this valuable, I know it was a lot of information. Please consider liking and subscribing. Our team put a lot of effort into this. We'll cover all these companies in more depth as the time goes on. We've got so much content and value planned for you. We hope to see you again soon. Have a great day. Have a great year. May the stock picks do well and invest safely. Cheers.